freezing of the central bank's assets, which was decided over the weekend by the European Union, as well as the other Western countries led by the United States. It shows what a significant move that is. That's actually much more significant than the SWIFT action, which again was breaking a taboo by Germany when it joined in on that over the weekend. It does mean that there's going to be this enormous scramble for dollars in Russia. We've seen the queues outside the banks and so on. The fact that the Russians cannot deploy a good part of this $600 billion worth of foreign currency reserves that the Russian central bank has been carefully building up does mean that we are onto an emergency war economy. And the idea of isolating Russia, which just a few days ago, as Annetta said, would have been thought of as unthinkable, it now is a reality.
David, there's the spectre of the double default that we saw in Russia not long after the wall came down. Ultimately, the crash in the ruble and the debt default. Should we be concerned that Russia is again now headed down that path, and that ultimately the central bank will have to step in here and prevent further selling of ruble if it can, with whatever means are possible?
Well, there's fewer illusions, I think, nowadays than there was in 1998 when we had the Russian crisis, which we all remember quite well. But of course, that was the harbinger of a big crisis in Asia as well. So there are these knock-on effects. I think what has helped is that there's a lot more foreign exchange reserves around in the world to protect countries, say, in Asia. Another thing we've got to watch out for, of course, is the Chinese-Russian links. It could be that China will be helping to bail out Russia behind the scenes with the state Chinese banks and so on. On the other hand, the Chinese are not totally enamored with the Russian military invasion of Ukraine, and it could be that they might be backing a new horse at some stage in Moscow. We have to watch all these things. I think also very important that Russia's been diversifying away from dollars in recent years. It's got quite a lot of euros, got quite a lot of pounds. It must be very worried that the European Union has therefore moved in on the freezing action, and the assets that Russia has got, say, in Germany, are now also going to be frozen. It's got more than $100 billion worth of gold. Could it use some of that gold in gold swap loans, for example, with friendly central banks or with friendly commercial banks, which we don't know the answer to?